Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the NGEN Markets Webinar. By the time the others join in, let's have a look at today's webinar topic. So today our main topic is how you could build in a model portfolio using NGEN Fund Score, and we would go forward with a detailed portfolio analysis. Firstly, we would analyze, or rather have a look at what does NGEN Fund Score mean and what is the method that is used for calculating the fund score which is allocated to each fund. And following that, based on the fund score, we would see how we could build in a model portfolio for the same as well. Once that is done, we would move to the portfolio analysis. We would just improve that portfolio, and following that, we would go forward with a detailed portfolio analysis. And lastly, we would look at how we could create in an actionable proposal, meaning a fresh client that you have, how you would pitch a properly new model portfolio to a fresh client. Post that, the quorum would be open for a Q&A session. You can either unmute yourself and ask your questions, or you could write down your questions in the chat box. So let us begin. So this is our NGEN Markets landing page. Now, before going forward with creating a model portfolio, let's understand what does NGEN Fund Score mean. So for that purpose, I'll just search a fund right here. Let's say I'll search maybe Parag Parikh. So this fund has gotten loaded in, and next to the name of the fund, you could see in a black tile, which has been mentioned as NGEN Fund Score 8.27. You could simply click on that, and it tells you how has the calculation done for this specific fund score of each fund. Now, this fund score ranges between 0 to 10, and more closer it is to 10, we say better is the fund score of this fund in comparison to the other funds. Now, the methodology which is used for calculating this fund score is there are three parameters that we basically undertake while calculating this fund score. First is this AUM as a parameter. So we basically allocate 10% weightage to the AUM of the fund, and the remaining 90% is distributed between short, medium, and long term returns and volatility, meaning the Sharpe ratio. Now, short is equivalent to 1 year, medium is equivalent to 3 years, and long is equivalent to 5 years. So, 1, 3, and 5 years Sharpe ratio is what we focus on. And this NGEN Fund Score is calculated on a month-on-month basis. Now, these are the two quantitative factors that we use for calculating this NGEN Fund Score. There is also a qualitative factor, which is basically the age of every fund that is considered while giving the fund score. Now, you would see that a fund which is rather younger would have a lower fund score, basically because it hasn't proven its performance in the market. So such younger funds would have comparatively lower fund score when you compare it with an older funds that has been there in the market for a longer time duration. And also, one important feature about this fund score is that this is comparable within category only, meaning intra-category comparison is only possible. Let's say you cannot compare the fund score of a flexi cap fund with that of a small cap fund. It's not possible. Now, in this category of flexi cap fund that we are currently looking at, you could see the highest fund score is with Parag Parikh flexi cap, which is at 8.27%, followed by JM and HDFC flexi cap. Now, this is the mechanism, or rather, how do we arrive at this fund score? Now, we would be looking at how we could create in a portfolio based this NGEN fund score only. So for that purpose, I go to this fund section. Now, in the fund section, this is the screener section wherein you could see in list of all the mutual funds that are trading in the market. Let's say I use this filter categories option and select specific categories out of which I wish to create my model portfolio. Let's say from this equity bucket, I select flexi cap fund as a category, large cap funds, and multi cap funds. Next, I go forward with the multi asset allocator as a category and also a children's fund as a category. And maybe from a sectoral, I would take in the FMCG. So as of now, I have selected in 6 categories and I would sort them on the basis of NGEN Fund Score. Now, this is the entire list that I'm currently focusing. Let's say I'll just input certain filter parameters using this apply filter section of minimum age. Maybe I do not wish to see young funds, very, very young funds. So I'll input minimum age as 5 years and minimum 3-year returns I'll take up as 15%. And I'll click apply. Once any of the parameter that you input, you, in order to see that activated in this fund section, you need to ensure that you hit this apply button. Only then you would be able to see the results. Now, rather, this list has gotten shortened based on these 2 filter parameters that I have input. Now, let's say I just sort this on the basis of NGEN Fund Score. Right here, you just click on the column heading. The data would get arranged either in the ascending or in the descending order. Now, I'll just select the best performing fund across every category. So the first category that I could see is this sectoral FMCG. The best performing fund is this Nippon India with a fund score of 9.10%. Now, the method is you simply click on this compare icon that you see next to the name of each fund, and it would take that fund directly to the compare section. So from this sector, this category I have taken in sectoral FMCG. Next, I go forward with this multi-asset allocator. In this category, the best performing fund is iPro multi-asset. I'll just click on the compare icon. So I have taken in funds from 2 categories, which is sectoral FMCG and multi-asset allocator. Next, being the flexi cap category, best performing fund is this Parag Parikh. I'll click on the compare icon. Next, what we can see is under this large cap fund, the best performing fund is iPro. But I do not wish to be bullish on a specific AMC because I already have iPro multi-asset, ICICI, a single fund from iPro AMC I have in the portfolio. So I do not wish to be overweighted on this ICICI AMC. I'll go forward with the next best large cap fund in this lot, which is right here, JM Large Cap Fund. So I'll click on this compare icon. Now I've taken in 4 funds. And now there are the remaining 2, which is multi-cap and children's fund. So next, multi-cap, if you could see, it is Nippon India. Again, I have a fund from the Nippon AMC. So I would go forward with the next best multi-cap fund in this lot. Right here, Quant Active Fund, multi-cap fund. I'll just click on this compare icon. Now, what we are left is this children's fund. The best performing children's fund is this HDFC Children's Gift Fund. So I have selected all these 6 funds, 1 from each category. Now I directly move to this compare section. You see, just by clicking on the compare icon, the funds have rather gotten moved to the compare section. Now, you could compare these funds with each other or maybe any of the benchmark. You just want to benchmark it against any specific index. Let's say I just want to compare them against Nifty 500. So there is the option right here, add other items. You could search in the index. I'll select Nifty 500 and it would get added in as a row item right here. And also, right now, the data that is visible would be since the inception of each fund because I haven't input a common start date. Now, the method to input a common start date is right here. You click on this settings wheel next to this returns column that has been mentioned. You click on that. Let's say I want to run this analysis for the last 5 years. I'll select 2019 May 22. And I'll click go. And as of now, the data that is visible is for the last 5 years that we are analyzing these funds for. Now, let's say I just want to see if all the funds have outperformed this benchmark, Nifty 500, in terms of its Sharpe ratio. So I'll simply click on this column heading of Sharpe ratio, and the data has gotten arranged. And we could simply see that every fund that I have currently taken based on its NGEN Fund Score has outperformed the benchmark, Nifty 500. And also, if you just locate at this CAGR as well, it says all the 6 funds have outperformed the benchmark Nifty 500 in terms of its CAGR for the last 5 years that we are analyzing. And this is basically funds that I have simply taken based on its NGEN Fund Score from the fund section. Now, the fund's performance is what we saw has been better in comparison to that of the benchmark. Before creating it into a portfolio, I would also like to look at the overlaps of each fund with each other in order to ensure that there is a limitations in the overlap, it is within the limit. Now you just come to this positions overlap tab, and this is a matrix structure which shows you common holdings between every 2 funds that you have loaded in the main list. Now you could see the correlation between Nippon India, iPru, Parag Parikh FlexiCap. Every 2 funds you would be able to see the correlation overlap. You simply click on this percentage and it gives you list of all these common stocks into which these 2 funds. Currently, we are focusing on ICICI Pru Multi-Asset Fund and Nippon India Consumption Fund. The common stock holdings of these 2 funds is what we could see, and their minimum common overlap is mentioned in this overlap column, the cumulation of which comes to a total of 16%. Now, by looking at this data, we could see that the overlap is within the limit, meaning it is up until 40% or below. You can just see that the color coordination for these overlap are within these light green and dark green. So we basically say that if the overlap is within this, or rather under 40%, it is a pretty decent portfolio that you can go forward with. If it goes beyond this 40%, wherein you could see this orange, pink, or red colored overlap sections, you need to take in decisions regarding the 2 funds for which you see these higher percentage of overlap, meaning keeping either of the 2 funds in the portfolio. Now, since these overlaps seems fine, I would also look at the drawdowns of these funds and also compare them with the benchmark as well. Now, I've just come to this drawdowns tab. I'll change in the start date for the last 5 years. And let's say while focusing on this worst drawdown, I'll just sort this data on the basis of its worst drawdown in terms of its size. If we just look at the size of this worst drawdown, all the funds that are under consideration, their drawdowns is lower than that of the benchmark. Nifty 500 has the highest drawdown in the last 5 years, which you could say that the other funds were able to rather recover, or they did not go down as Nifty 500 had gone down in the last 5 years when you consider its worst drawdown. Now, I am satisfied with the data that I see right here, meaning I'm satisfied to create a portfolio out of these 6 funds. Before creating into a portfolio, the option is right here, convert to portfolio. Before clicking on this option to convert to portfolio, I would just remove this benchmark from this list because benchmark couldn't be, or rather cannot be, a part of the portfolio. Now that has been removed. I'll simply click on this option as convert to portfolio. Now this portfolio is saved as name compare 20 in the portfolio section. So I go to this portfolio section. I'll collapse all the folders. And since this has been created from the compare tab, I'll click on this from compare option. Now you see this name from compare 20, 24th May, 1619. This has been created just now. Now let's say I just want to change this name. It is pretty simple. You click on this drop down and you just click on rename. Let's say I'll input portfolio Once you input the name, you simply click on enter to make sure that the portfolio name has gotten saved. Now again, I'll just collapse it from compare. This is the portfolio I just renamed. Let's say I just want to run an analysis. I simply click on this drop down and I'll click on run now. Now this is the portfolio that I created from the compare section. And because of that reason, you see the components currently would be equally allocated as this has been taken it from the compare section. Now, we can also use this improve portfolio option that you could see to begin with a specific allocation if you're not sure how you can go forward with the allocation. So I'll click on this improve section. It gives you suggestions how you could change in the allocations of components of your portfolio in to achieve either of the three objectives, either to maximize the return or to minimize the volatility or to maximize the Sharpe ratio. Now, let's say your client's risk appetite is rather on a moderate side. So you could go forward with this Sharpe value allocation that you see right here, wherein the annual returns are also moderately increased. The volatility remains a bit constant or rather lower at a level, and the Sharpe ratio has also been increased by a specific percentage. So you could suggest this portfolio to your client whose risk appetite is rather a moderate one. And you can also save this allocation that you see. You simply click on this save as an option. Let's say I'll just save this as portfolio. And I'll click on create. Right. So this as well gets saved in the portfolio section. So I'll go to this portfolio section. I'll collapse all the columns. Now, since it has been created from the improve tab, it would be available right here in this improve folder. You click on that. Now, this is the portfolio that I'm currently going to actively analyze. So let's say I'll just want to change this portfolio to this active folder. You click on this drop down and there's this option move to. From improve, I'll just click on this drop down and I'll select active. Now this portfolio has rather moved to this active folder, and let's now analyze this portfolio. I'll just click on run. So this is the portfolio that I just saved using this improve portfolio option. So you could see its allocation in the component of each portfolio. Next to that, what we see is this start date and end date as an option. Let's say I just run this analysis for the last 5 years. And this is the benchmark reference index 2 that the platform is suggesting. Since I was analyzing my funds against Nifty 500, I could just use that as well here as an option. So you could just select this NSE as a sector, as a section, and you could just select Nifty 500 as a benchmark. So the option to select benchmark as per your choice is available. The platform would suggest a reference index based on the asset allocation every time. Now I'll just go to this asset allocation tab. So under the asset allocation, what we could see is this overviews tab, which lets you see the total exposure that is there towards the portfolio. Now, right here, you see HDFC Bank as a stock has an exposure to an extent of 4.08%. Where does this come from? You simply click on this I button. So it tells me that there are these 5 funds that are a part of my portfolio and they have held into the stocks of HDFC Bank. That is the reason my portfolio as a whole is getting an exposure from this specific stock. Next, what we could see is the concentration tab. And right here, you could see the split in terms of the equity market, meaning the large, mid, and small cap split. Now, what we see in the overviews tab, this equity is to an extent of 80%. Concentration tab shows me the split of this 80% in terms of large, mid, and small cap. right here. Large is to an extent of 54%, mid cap to an extent of 14%, while small cap is to an extent of 12%. You simply add this up, 12, 14, and 54, it would come up to this 80% that you see. Now, everything other than this equity percentage would add up to the others pie section that you see. Cash, debt, foreign equity. Everything other than that, other than equity, would come up to this 20%. That is how you need to understand this. Next is the equity sector exposure that you could see, which is the heavily weighted sector towards your portfolio. Currently, you can see banks is an heavily weighted sector. You could simply click on the bar graph. It tells you, or rather shows you, list of all the stocks under that specific sector that have exposure towards your portfolio. Next, I come to this performance chart, which shows you how does your portfolio performs against the benchmark that you're currently analyzing. Blue line showing the performance of your portfolio and black line showing the performance of your benchmark. Clearly, outperformance is what we can see. And we can also see that in terms of its cumulative return, which is the absolute return higher for your portfolio in comparison to that of the benchmark. Cumulative return for your portfolio being at 182%, which is higher than the benchmark cumulative return at 124%. Next, what was the risk that was undertaken to generate the returns is 13% risk undertaken by my portfolio and 18% is the risk undertaken by the benchmark. So you could say your portfolio generated better return at a lower level of risk in this time duration of 5 years that we are analyzing. And we can also see that in terms of its Sharpe ratio, which is higher for your portfolio, 1.06%, and in comparison to that of the benchmark. Next, what we can see is this cumulative return, which is basically alpha. 58% is what we can see due to outperformance by this portfolio over that of the benchmark. Next, what you could see is this tracking error and information ratio. Now, in order to understand these two components in more detail, I would take up two funds, which is one actively managed fund and one passively managed funds. So I have these two funds ready right here. So the first passively managed fund that I have taken in is Axis Nifty 100 Index Fund. Now, the basic objective of this index fund would be to piggy bank the performance of its benchmark. Now, this is a large cap fund. Let's say I just change the analysis to the last 3 years. Right. Now, since this being an index fund, as I mentioned, the objective of this fund is to piggy bank the performance of the benchmark. And that is what we exactly can see in this line graph. You see the line graphs are overlapping each other, meaning the fund hasn't done anything special in order to outperform that of the benchmark, because that is not the objective of an index fund. Its objective is basically to piggy bank the performance of the benchmark. And for that reason, the tracking error of any index fund would always be lower. Right here, you can see the tracking error of this index fund is at 1.38%. While that is not the same case when you analyze an actively managed fund. Right here, I have a Baroda PNB large cap fund. Now here, the objective of this fund, since this is an actively managed fund, the fund manager would bring up any such strategies to rather outperform the benchmark. Now, again, I just changed this analysis to the last 3 years. Now you could see the blue line showing the performance of the fund and black line showing the performance of the benchmark. There is an outperformance by this fund against that of the benchmark. As I mentioned, since this is an actively managed fund, the fund manager would bring up strategies for this specific fund to outperform the benchmark. And because of that reason, you would see it would have a higher tracking error when you compare it to that of a passively managed fund. And next being this information ratio, this is basically the division of this annual excess simple with that of the tracking error. You divide 3.10 with 2.80% and you'll get 1.1. Now, this tracking error would be positive when the annual excess is positive. Now, this was the meaning of tracking error and information ratio that you could see right here. Next, I go forward with this contributions tab. This tab basically lets you know how each fund individually contributed to generate portfolio return as a whole. So in the performance tab, we saw that the portfolio return was 182%. Now, contribution tab tells me, based on the allocation of each component of my portfolio, how did each fund individually contribute to generate the portfolio return as a whole. Now, next to Parag Parikh, you see 195%. Now, this is the individual return generated by this fund, Parag Parikh. Now, based on its allocation in my portfolio, you see it is allocated to an extent of 18%. Based on this allocation, its contribution to my portfolio return comes to a total of 19.98, approximately to a 20%. So this contribution tab could help you to take in decision. Let's say a specific fund is in the portfolio is generating very least amount of individual return or very minimum amount of individual return. You could take in decision to maybe remove it from your portfolio or rather reduce its weightage in your portfolio as well. Next, I move on to this rolling returns tab. Now, this tab basically lets you see the consistency of the portfolio simultaneously for 3 rolling windows. By default, the rolling windows that you could see is 260, 520, and 780. These are editable anytime. You could just multiply the number of years into 260 and you could just input it and click on run. Now, the data that you see right here below 260 average, this is basically the average returns for a 260-day rolling window in this portfolio, meaning you stay invested in this portfolio for any 1 year, starting from May 2019 to May 2024. Your average return from this portfolio would have been 22.68. Post that, if we just locate at this lowest return that was generated by this portfolio in 3 different rolling window, which is 260, 520, and 780, we see in a 260-day rolling window, the lowest return that was generated was a negative 9%, while when we look at a 780-day rolling window, even the lowest return was a positive 17%. Now, what does this basically mean? It says that the more you stay invested into mutual funds, the probability or the chances of generating lower return would also be reduced. You could simply know that by looking at this lowest return that has been generated over an increased period. Next, I come on to this beta tab. So beta basically lets you know the uncertainty or rather the risk which is associated with the portfolio when you compare it to that of the benchmark. Now, we always say the beta of a benchmark with itself will always be 1. And a beta less than 1 will say that the component or the portfolio is less riskier. Now, right here, we are comparing the beta of this portfolio with that of Nifty 500. The benchmark that we are currently focusing is Nifty 500. Now, this says that my portfolio is less riskier than that of the benchmark, Nifty 500. And next, if we locate at this correlation, now this correlation that you see is different from this correlations tab that we have right here. This correlation tab lets you see how 2 funds of your portfolio are similar in terms of the NAV movement. You are able to see the correlation between every 2 fund of your portfolio. While the correlation that you could see in this beta tab, this is the correlation of this portfolio as a single thing with that of the benchmark, Nifty 500. You can see 0.97% is the correlation of this portfolio with that of the benchmark. Now, this was the portfolio analysis. The reporting option is basically a PPT. Now, this is a portfolio. Let's say you are suggesting a fresh portfolio, you're suggesting to a client, and this is an could be used as an actionable proposal as well. Let's say you just want to draw in a check, or rather your client's AUM is maybe 50 lakh. You input that figure and you click on create PPT. So what would happen is basically you would be able to see in an amount based PPT. Right. So the second slide, you see the 50 lakh that I had input gets distributed among the components of your portfolio based on its weightage. So your client would know that how much amount is being invested into each fund. So that level of drill down could also be seen once you use that amount based PPT option. Now, these PPTs are editable. You could insert in multiple slides as well. So I would just show how it could be done. This is the tab which shows you the asset allocation of the entire portfolio, the performance chart, the rolling returns for the time duration of 260, 520, and 780. This is the default since I hadn't edited any time duration before generating the PPT. That is how it got generated. Anytime you could edit that specific time duration in the rolling returns tab, and then you generate a PPT. This time data point that you can see would change. And also this drawdowns tab is what gets generated. You could insert in multiple slides as well. And now let's say you just want to analyze, or rather highlight a scenario wherein you just want to highlight how the portfolio performed in the budget scenario. So I have this budget scenario created on my end. So the start date and end date is something that I had input, and I can see that the portfolio has outperformed the benchmark. Blue line is the portfolio performance, and the green line is the performance of the benchmark. So we have this screenshot option on the platform. Every tab that you go on, you could take in a screenshot. For now, let's say I just use this snipping tool and take in a screenshot. So in such manner, you can insert in multiple slides and also take in screenshots of any tab that you're on, and that could be inserted into these PPTs that you send across to your clients as well. All right. That is it for the topic related webinar. If anyone has any query, you can either unmute yourself or type down your queries in the chat box.
Prajakta. Hello.
Yeah, hi. Hi,
Yeah.
please tell me. Yes.
So, no, there are no Excel sheet provisions given here in the portfolio section, portfolio analytics section.
So Excel down.
Screenshot and PPT is fine as long as we want to share it with the customer. But before
Right.
sharing it with customer, we would like to, selectively give out the data to the customer. What is relevant, what is not relevant, how much to and all. And plus, at the same time, we need to also check for ourselves, that the data and the presentation and then the output is all right. So Excel sheet serves much better in terms of data analysis.
Look, typically, for asset allocation, if if you're looking to download all the exposures, there's a separate blue icon, download in CSV, that is already given, right? So you see that small download Excel all exposures button that
CSV is
downloads
okay. If
everything. Yes.
CSV is there, fine.
Yeah, exactly. So that gets downloaded. So basically, that downloads all the portfolio exposures into a single Excel sheet. Additionally, if you even have a look at the contributions tab, right? You'll also
Okay.
see a download into CSV option there, wherein
Yeah,
you can
CSV is
put in
then
a start.
fine. CSV is
Yes,
fine.
yes, of course, of course. That is right there into blue. That small icon that you
Okay.
can see in blue, that is basically downloads into CSV. Additionally, we have it also enabled for stats tab. Beside the contribution tab. So wherever there's substantial data wherein you could analyze that or take it into an Excel, we have made sure we've not missed out on giving the Excel option. But if you are
Okay.
specifically looking at for some specific section, please let us know. We can maybe note it down as a feedback.
No problem. No problem. I just wanted to know, why would you like to have the stats here when you have the same stats in the compare section?
No, of course. So here, basically, this is giving you on the basis of the subcategories, right? That are, there for each of these funds. So, for example, in this case, if you just have the overview, in the portfolio analytics, you cannot see the fund which belongs to which categories, right? So in this case, in the stats tab, it gives you, okay, mutual funds equity is the main asset class. In equity as the asset class, flexi cap is the subcategory. From that category, we have one fund. Large cap is the another category. We have one fund in that,
Agreed,
right?
agreed,
So
agreed,
this is the
agreed.
gist of it, and of course, some basic parameters as mentioned, right? So AUM, TER, large cap, mid cap, small cap split. Of course, please note the
Those are
data
all
here
there.
since
Those are
inception.
all there
Of
in
course, of
fund.
course.
Those are there in fund
No, of
section as
course
well
they
as
are.
compare
Of course
section.
there are.
The only difference being that, there also you can select multiple funds. Thankfully, you people have
Yes, of
allowed
course.
that
And we have
provision.
mentioned that clearly this is data since inception, right? So this is
Yes.
just
So
for the
you
overview of it.
only
Yes.
the thing is the contribution wise is the percentage of portfolio of different funds is different. So from
Correct,
that
correct. And
point
that
of
can
view,
be
this
seen
is
at the
right.
top.
Yeah.
Correct.
Yeah, hi, this is Arnab. Another reason the stats tab was added here is because quite a few people said they just want to see some basic numbers for all of the funds, and they wanted it in, readily available without having to click on the add to compare buttons. Because if you wanted to just quickly look at some returns of the funds that are in your portfolio,
Right.
you'd have to click on that button and take it to compare and then check it. So this basically saves you a step. But again, if it's not of use, you can kind of skip through it and go to the
No,
other
no,
one.
no, not a problem.
Yeah,
Not a problem.
yeah,
See,
yeah.
this basically gives you an idea at different weightages. So that's okay.
Yeah. So here in these stats, there are no weights considered in this tab, right?
Oh,
They
I
are
see.
just listing the funds because they are just listing the funds. So you have six
Okay,
funds here.
okay,
They say
okay.
these are the 6 funds. These are the independent stats of the funds in case you want to see. But it is the same information as compare. That you're right. It's the
Yes,
same
yes,
information.
yes, yes,
Yeah.
yes. You can save your server memory and space.
No, sir. So we have we
I'm
don't
just saying on a lighter
that we
side.
don't save cost in that, sir.
No, it's not about
whenever
saving cost. It's not
yeah.
about saving cost. Trying to understand, like a duplication of data here and there. So
Yeah, so it
nothing
comes from the
else.
same source of data. It just
Yes,
gets
yes, yes,
displayed in two different places.
yes, yes,
So
yes.
it's just for some people had asked for it, so we added it
No,
and
no,
we've
good,
seen
good,
users.
good, good,
Yeah,
good,
yeah,
good, good.
yeah.
Arnab sir, I just wanted to check on with you. Last week I had given a lot of
Yes, sir.
suggestions.
Yes, sir.
So hopefully, when can I see the light of the day of those small
Yes, sir.
small?
So we are working on. We have a live set of requirements that we're working on through this month.
Okay,
So we will be releasing something in the first week of next month.
no problem.
So it will have quite a lot of the feedback that is, and if anything is missed, it will definitely be added the month after that.
Yeah, the smaller ones are the provision of Excel sheets and the drawdowns and all. So
Yes, that is there. Yes,
so those are all the simple ones. And the
yes,
main one was the Martin's ratio, Peter
yes,
Martin's
sir.
ratio.
We've got that. We've got that in there.
Yeah,
Yeah,
yeah, yeah, yeah,
yes,
yeah.
yes.
So risk adjusted return divided by that, what we call
Uh,
ulcer index,
Yeah, the ulcer index, yeah, which makes
which gives
comes
you
out of
the
the
Martin's
drawdown. Yeah,
ratio. Yeah,
yeah, yeah. Fair enough.
right. Hopefully, I think everything was listed down, taken down, and
Yes,
then one by
absolutely,
one,
sir.
as per your
Absolutely.
convenience and priority, you would be
Yes, sir,
releasing it.
absolutely. It is definitely in the list. So we maintain a very strict list, so we don't miss things.
Yeah. Thanks a lot for that.
Thank you.
Thank you.
Thank you.
Yeah. Even the same case for risk and return. You have written there. So risk and return also is a full chart, which I have
Yes,
to jot it
the
down. So
data,
that,
yeah, the data,
yeah,
the
it
Excel
gets
download for
converted
those
into Excel.
numbers.
Yeah, that
Yes,
data
yes,
gets, in a tabular form. If it comes in the Excel, fine.
exactly. Yes, that is there
Right.
for sure as well.
These are essential things when I research. There are many tedious work which then I have to do. So
Of course, I understand. Yes, sir. Yes.
So I have to individually jot down all the numbers in the Excel sheet and then make up.
Yeah, exactly.
Yeah.
Pratiksha, this is Yuvraj. So I have one small question.
Please.
So in fund section, there is option to generate a maximum 300 top funds. So is there any possibility
Yeah. Hi,
to
sorry, your
generate
voice was
overall
breaking.
US funds in this report?
Yeah, so I think you got cut off there, but I believe you're asking for generating more than 300 results. Is that
Yes.
right?
Yeah, right.
So see, the thing is, the issue is not the amount of data. Funnily, the actual issue is the rendering of all the information on a web browser. It basically starts to hang the web browser. So, that's the reason that we have that. But again, the main purpose of this section is to basically give you, a sorted list. So you can sort by fund score, or you can sort by PER or something like that. So it basically shows you the top 300, which will hopefully cover most things. The only way that we can increase this number is if we give you the results directly in Excel or something like that. So the time taken is not the issue. Time taken to get the data is not the issue. The issue is actually displaying all the data on a web browser. And typically the result will be that it will hang it. But we will take another look at it and try to see if we can increase it. You got cut off there for a second. What kind of number of funds were you hoping for instead of 300?
Yeah, so we are just looking for the overall funds, universe funds, and we can take analyze on the overall
So
funds.
if you want to download everything, you can use the report section where you get an Excel with everything in it.
And
So
in
in
that report,
yeah,
all the funds are segregated in different sheets. So
that's
that,
right. See, the issue is it is not really possible for us to give you a download of all of the funds, because that will kind of go against the policy we have with our data provider, because what we can't do on the platform is give you all of the data in downloadable form. That will cause issues with the agreements that we have with our data provider. So we can only kind of give you tools to do some research and download these. But if we give you all of the data in one Excel, that is effectively then providing the service of providing all data, which will kind of go against the agreements we have with them. So it does have to be filtered, unfortunately.
So whatever the funds showing there in top 300, that is top 300 funds compared to all the universe funds. We do not
Top 300
irrespective of all.
based on whatever sorting method you've used. So here you see here basically the blue column. This is when
Understood.
it
This is
says
NGEN
top.
scores and
Yeah. So you can click on anything else. You can sort by TER, for example, or AUM, whatever you want. And now it will show you the top 300 funds based on TER, and you can filter on the top left that only use this category, or you can say all funds, but you have to use some kind of sorting. So for example, you can use AUM, you can use a filter for the AUM and still do the top. So there are many ways of getting the relevant funds that you want out. So the top 300 here basically refers to the fact that it is top 300 based on whatever sorting you have used.
So top 300 in terms of all metrics, like in terms of NAV, TER, AUM.
Whichever one you choose, whichever heading you click on, it will be based on that heading. So in this case, we are using TER. And you can further filter those results, because on the top, we've selected only 6 categories here. You can select more or
if
less.
I'm not selecting, if I'm not putting any metrics there in the top filtration part, and then I'm
Fine.
just clicking
Everything will come.
generating the top 300 reports.
Yes, then it will be across all the funds.
So across all the funds, it's a top 300, right?
That's right. Only filter that is mandatory is regular or direct, which is currently by default, it will be regular funds.
Regular, right.
That filter you
Understood.
have to apply, right?
Correct.
Yeah.
Fine. Okay.
Yeah.
Understood.
Okay.
Thank you.
Thank you. Any other questions? Please let us know.
Hello, Arnab.
Yes, sir.
In the fund section, the age of the fund is listed in the last column.
Yes, you can filter the columns, however. So in the preset column views, for example, if you look at basic, the basic columns, it will come in a much more viewable way. So if you look at basic columns, then I think age is part of that. On the right hand side, it will show the age.
Yeah, that is what I'm trying to say. But
Yeah.
I don't know. You must have put it with some specific purpose in mind. But preferably and ideally, the age is better served if it is along with the AUM, right?
Understand. Yeah.
In compare section, it is sitting next to the AUM.
Yeah, so that's a good idea. Ansu, please, Ansu Prajakta, please write this down. We'll shift the age column in its default position to along with NAV and AIM. Yes, so that makes sense. That makes sense.
Yeah, because
I think the age was added later, sir, so that's why.
It must be a
through
through oversight which remained in the configuration, I guess.
Yeah. We'll shift it. Sir.
Yeah, just what I do is every time I take a Excel, then cut this column,
then take it
put
out.
it there,
Yeah.
then put it there along with the AUM.
Got it.
Yeah. So
yeah, we'll do that, sir.
Yeah.
Any other questions? Please let us know.
So far, so good. I guess last video session, the webinar must have been posted in your YouTube channel.
Yes, sir.
By now?
Yeah. I think so. Prajita, Ansu, can you confirm?
Yes, sir. It has been posted.
Yeah, it has been posted, right? So I missed that her Excel sheet working and all, and then also missed partially the ranking and the value metrics at the improve section.
Yes, sir.
So,
yes, it's been uploaded.
Okay. So I'll look into it and then come back.
Yes, sir.
Because again, I'll have to refresh myself on that improve section ranking, the ranking part and the value part.
Of course.
So, yeah. Okay.
And in case you want to arrange a separate session, we're more than happy. Please just drop us a line at support@ngenresearch.com, and we'll set up a separate individual call for you if you want.
No problem. Thanks for that. Let me also have, apply myself. I will definitely have some problem. So then I'll definitely, call back and understand.
Perfect.
Yeah. Thank you.
Any other questions, please let us know.
One more thing I just wanted to ask in the portfolio analytics,
yes.
In the contribution section, quant active fund at 19% weightage was giving across close to under 300%.
Oh no, so the 300, if I read, that is the pure
300
return of
total
the fund.
return, total return.
Yeah, so that is the total return of the fund individually.
Individually. But
yeah,
if you go down, the portfolio
Yeah.
return is 182,
Yes, sir.
right? So that
Yeah.
means this is definitely outperforming the overall portfolio and
Yes,
portfolio return.
yes, sir. So quant active fund versus this portfolio, quant active fund will do better alone.
Yes.
On its own. Yes.
So that way we can filter. And the another one which Pradakta said was that this return contribution to return 10%
Yes,
and
sir.
9%, if you see for JM Large and SDFC Children Gifts,
Yes,
from
sir.
their weightage is higher, but the returns are lower. So that can be removed, right?
Yes, but sir, the number
return to
Yeah.
the weightage is lower, right?
Yeah, sir, but
Return to weightage is lower, even total return is also lower.
yeah, sir, but this contribution to return you should not compare to the weight, because this is not the absolute return that these funds have given. This is a portion. So basically,
Okay.
if the portfolio return is total return is X, it is given 10.17% of X. So 10% of the total portfolio return has come from JM.
From JM. Okay.
Yeah. So 10% doesn't mean that it is contributed actual 10% return. It means 1/10 of the total portfolio has come, total return has come from
JM,
these guys.
from JM
Yeah.
Large.
Yeah. So you can make a statement that quant active fund, because of its weightage and because of its performance, has contributed 30% of the return of this portfolio.
Right.
So one third of the return has come from them. Almost one third.
Okay. So out of 6 children, one is at 30%.
Exactly.
Okay. So that is, you have to consider as pie. From
Yes.
a pie,
Yes.
this contribution is this
That's
much.
right. Exactly. This is a pie chart. That's what it is.
Okay. Probably as a suggestion, I don't know where.
Yes, sir. I just thought, as we were talking, I just thought we should probably put a pie chart in there. That makes more sense.
So
actually.
that
Yes,
gives a better visual.
Yes, sir. Definitely.
Right. But no matter how, people will still have, they forget, and then probably I myself will also again ask, maybe after 6 months or 1 year. But then
Yes, sir.
continuous practice will put us in proper.
Absolutely, sir. Absolutely.
Yeah. Thank you.
Perfect. Okay, if there's nothing else, also you can close for today.
Yes, sir. Thank
Thank
you
you,
all.
team. Thank you,
Yes,
team.
sure, sir.
Thank you, sir. Thank you.
Thank you all for joining in. You can anytime visit our YouTube page. All the webinars that have been conducted up until now would get available in this playlist that we have. Today's webinar will also get uploaded as well. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.